Time for a Q&A. I'm back in Canada now, Wednesday, 7:49 a.m. It is a Fed day. I tried to do this yesterday, but I had way too much to do when I got back to get caught up. I haven't even had a chance to look at any of these questions other than the one that's on the screen in front of me now. So let's go. I did have to expand all the questions, and I saw one that seemed to go on for like a page and a half. When we get there, for the writer, don't be upset if I skim through it. It's just a long one. First one, K-shaped economy. Top 10% accounts for 50% of spending, propped up the U.S. economy. Leads me to believe any kind of significant drawdown in equity markets, even if a slow bleed, would actually cause a recession. Any kind of significant drawdown in equity markets, I guess we'd have to define what significant means. As asset owners in the deluge of new 401k millionaires, 3% mortgage holders see their paper wealth drop by 25% plus. Okay, well there it is, 25%. They will pull back on that last leg of overspending. So what you're describing is the wealth effect. Is even if we don't lose any of our income, if our financial assets lose value, we feel poorer and we will cut back on our spending. Even though our income and cash flow are the same. It works the other way around. A rising stock market makes us feel richer. We spend more of our income. I'm not sure where the 25% is, if that's sort of just a rough guess that a drawdown of 25% would induce a recession, or if that's based on some historical level of drawdown where a recession has tended to follow. I don't see a question there, a comment, but okay. If US-based builders are currently not on your radar, what makes Canadian REITs stay on it? Well, there's always a competition between should I rent or should I buy. If buying is not going to happen, mortgage rates are too high, housing prices haven't come down enough, people will continue to rent. It is when housing affordability is at its highest, meaning it's the most affordable. The rental market is more challenged because more people say, look, I can rent or I can buy, and buying is almost the same cost as renting. That is not the case right now. Not with mortgage rates in the 6.6% range. So it's not as if you love housing, you must love renting. They're usually somewhat opposite each other. If Canada has a large publicly traded home builder, given the massive shortage we are facing, would they be on your radar after being down 20-30%? Not with a tariff war and not with an impending recession. Our export sector makes up 20% of the economy. And when I say export to the U.S. Is 20% of GDP, which is quite significant. It's not as if that would go to zero. But if it goes down by 5%, that's a big recession in Canada, 5% drawdown in GDP, like negative 5%. That's a big deal. If you can get interprovincial trade going and find new trading partners, then okay. If the Canadian dollar can depreciate by a significant amount to 148, 149, 150, the effect of the tariffs might be nullified. But it would be a recession. Nobody really knows right now, but we do know it is a trade war. So there is uncertainty as to how long it'll last and whether or not there'll be a recession and how deep that recession will be. That is not the condition under which people go out and say, I want to buy a house now. So no, I probably wouldn't do it. Not in front of a recession. Vinny Daniel, Big Short fame, state he believes Besant has to get the U.S. 10-year rates lower. That's true, because the formidable task of refinancing U.S. long-term debt this year, I don't know if I'd call it a formidable task. There is a large market for U.S. Treasuries, although with the methodology of the current administration of wagging their finger in everybody's face and and opening trade wars on how many fronts and calling everybody names, I don't know if the demand for treasuries will be the same. So maybe it now is formidable, but only because of the effect of the methods by which this administration is employing its policy. U.S. cannot service its debt. Yes, it can service its debt if refinanced at the present 10-year rate. No, it can service it. It's just really expensive. In the event the 10-year rate does not go down, does this put holders of TLT at risk of being affected by the possibility of the U.S. requiring long-term debt holders to accept exchange of debt into perpetual U.S. bonds that could only be exchanged into assets? I've not heard of any policy like that being implemented. One of the alternatives supposedly being discussed as part of the Mar-a-Lago Accords. Well, there are no Mar-a-Lago Accords. This is one guy's theory, one guy who's not in the administration or making policy at all. It's just one guy's idea of how things could unfold. I really doubt that this, I'd put the probability, if you had either 0% or 1%, I'd put it closer to 0% than 1% that this would happen. This is not part of the administration's proposed policy. As far as I know, this is one analyst's theory. That's all it is. If CPI and PPI are measuring the same transaction, but the only change in perspective of who pays and who receives, shouldn't the numbers be the same? Nope. Here are consumers and they buy stuff, right? And here are producers and they buy stuff. Sometimes they stop at an insurance company and the insurance company buys stuff. Here is business, they buy stuff. You have investment, fixed investment, they buy stuff. So this is the only thing that gets measured, and this is plus tax. It's what the consumer pays out of their pocket. So if taxes go up, sales taxes go up, CPI goes up, and that's all it is. Right here. The producer receives money from consumers, receives money from insurance companies, from business, whatever the producer receives, and it is without tax because the producer doesn't doesn't charge the tax, only collects the tax and remits it. So the consumer pays the tax, but the producer doesn't receive the tax. And it's what the producer receives. This is for final demand, by the way. There are two indexes produced, or two parts of PPI. There's one for final demand, for both goods and services, and there's one for intermediate demand. And you have 4 stages, stage 1 to stage 4. This is the value chain on its way to final demand. This is final demand. So here's where the producer sits. It's what they receive from all sources, regardless of who pays it. CPI is what the consumer pays. It's just the other side of the transaction, that's all. The consumer also has things like owner's equivalent rent. That is an imputed price. That doesn't exist over here. Discord is great. We really enjoy it. However, since I live in Europe, very difficult to join your Market Outlook live appearances due to different time zones. Is there any option in Discord to record your live sessions to watch offline later on demand? That's interesting. I guess I could do a screenshot of it. Yeah, I guess I could do that. But I'm going to be moving to the stages, not doing it in a voice channel, but moving to stages. So I don't know how that's going to work because I haven't done the stages yet. You said Tesla had engineered their cash flow last quarter. Can you explain how they did that? So when you're looking at cash flow, it is also change in assets, change in usually working capital assets, and same with I'll just put an A, and same with liabilities, working capital liabilities. How you can get more cash flow is you can reduce your working capital assets and increase your working capital liabilities. These are both sources of cash, right? That's a source of cash. And that is what had happened. Carbon tax is literally the one tax that fits with classical liberal ideals. Unless you propose to privatize air pollution is a negative externality that is not addressed with free markets. Unless you find a way to securitize carbon. which a carbon tax does by creating a market exchange for carbon credits. How else would you account for firms who socialize their cost of production with air contaminants? I don't know how to answer that one. The carbon tax was something the conservatives were campaigning on. Axe the tax, right? That was one of their campaign platform promises. We're going to get rid of this tax. And the first thing Carney did is he got rid of the tax. Now, I'm not making any judgment on what that means, other than it's a very political move. He took away one of the platforms the conservatives were running on, and made it a liberal delivery as opposed to conservative. It's a political move. As far as the rest goes, the debate about what function it serves and whether or not the market could serve a different function, we'll leave that. Went to Canadian to replace CO2 tank for soda stream that normally costs $20. Was offered Canadian version for 14, taken that instead. There we go. Look at that. Already cheaper. Let's see. Appreciate your work. Find yourself through Geneva. I'll be in Geneva, I think, June 1st to 13th, 14th, somewhere around that time period. I don't think we can. This is it. See how long that one is. I don't know if we're going to get all the way through it. Tariffs a headwind or tailwind yet for inflation? Well, you can't definitively say anything. All you can do when you are forecasting futures is have a list of potential tailwinds, a list of potential headwinds, but you can't say definitively anything. That's the thing about the future, is not that it's not that it's difficult to know, it's that it is unknowable. It does not exist. And your thinking about the future today can create the very future you think about if your thinking leads to action or inaction. So the future is not only unknowable, but it is also creatable. So no, I agree. From my perspective, it depends on where we are in the business cycle. Consumer is truly tapped out and demand not showing up for inventory has to be deflationary. Well, no, I think you're conflating things, right? You're just conflating things. It would be like me punching you. Is it going to hurt? Well, if you're alive, yes. If you're dead, no. But it doesn't change the fact that there are two events in there. So you could have two things going on at the same time. Is you could have tariffs, which could be inflationary. However, you have falling consumer demand, which is deflationary. So without tariffs, the inflation, if this is the zero line, rather than positive, it could turn negative, right? If you don't have tariffs. If you have tariffs, it might look like this instead. So, but you'd still get deflationary, but not as deflationary as if you never had them. So I don't know that we would separate the two. We can say, and most economists understand this when we talk about an economy, it's complex. There are a lot of things moving, and when one thing moves, a whole bunch moves. So it's hard to determine the actual effect in the end, but we usually say all things held constant, a change in this variable would lead to this. So I don't think we need to lay out 4 or 5 different scenarios and say, okay, now it would be this, now it would be that. Usually we understand the complexity of things and we isolate it to a change in one variable, but other variables could be changing at the same time that magnify the effect or dampen the effect. Let's see. I don't really see data that we can come to any. Okay. I would not be surprised if economists drawing early conclusions of tariffs of deflation. Okay. Only time will tell. We have. Okay. Forget that. I don't mean forget that as I'm not. We're on the same topic. We could say we are in a higher. Okay. Same thing. Okay. I haven't lived through the 70s or been through market. Layoff cycles are, from what I understand, the most extreme, painful parts of a business cycle. Most painful part of a recession. True. Unemployment is okay. I'm going to agree with that. High unemployment. Okay. 50-60% are, after all, living paycheck to paycheck, and so many people. Okay, I see where you're going with this. This is especially with the U.S., especially in countries where you have a high marginal propensity to consume. Unemployment is the biggest threat out there in terms of the recession, or how bad the recession is, because it takes away a lot of spending right away, and it's usually those who do live paycheck to paycheck that tend to lose their jobs in recessions. But I've said this many times, the quickest way to fix inflation is to separate people from their paychecks. That is the quickest way. So a recession is a quick way to get these high interest rates done with, and to get inflation over with, and to reset the system. It is the quickest way. So, every cloud has a silver lining, right? This would be I think, a particularly bad recession for the U.S. because it would probably not come out with a lot of fiscal support. But we'll pass on that one. Deep fear Carney pulls off enough seats to keep conservatives at bay with a minority, in which a supply agreement with the blocs would be created. In response to your question, Carney does not have enough time and is at the end of the day liberal, which Canadians are tired of, and will ruin his reputation by following a bad act like Trudeau. Given polls or betting outlets have materially lifted Carney's chances. This has happened with Harris as well. When Kamala Harris replaced Joe Biden, up she went. It was remember, the polls had Trump and Harris in a dead heat. But the momentum before that happened carried through to the election. Poilievre has been characteristically silent. I think he's waiting for a moment on the chessboard where Carney makes a bad move. I don't know. He does have the real potential. Well, put it this way: with Carney there, the Liberals will win more seats than they would have with Trudeau. With Trudeau, it was guaranteed blowout. That they would have lost significantly. With Carney, it may be different, or at least the perception may be different. Now, is he another Trudeau, or is he truly a Pierre Trudeau, Justin's father? Is he more in line with the Liberals of the 90s, Paul Martin, Jean Chrétien, or is he more left-wing and more like Trudeau? If he is more in line with Pierre Trudeau, with Paul Martin, with Jean Chrétien, then okay, I'd be okay with that. I don't know if Canadians are willing to take the chance on more Liberal government, given that we've seen what the last 8 years have brought, this excessive virtue signaling, what that ideology has brought. So I don't know. He is more respected among world leaders, having been Governor of Bank of Canada, Governor of Bank of England. He is more respected in that sense. He was a steady hand. He wasn't a radical in any way whatsoever. So that might help him. If he wins and he's like Trudeau, then I guess Canada gets the government it deserves. But if he's a classical Liberal, more in line with the traditional Liberals, or the Liberals of 20, 25, 30 years ago, that could be good. I'm overweight TLT in my portfolio as a bet on duration. I know you have TLT as well. I have several reasons to be bullish, but I'm wondering if you give me the bear case for TLT. The bear case in my mind isn't going to happen for quite some time. I think you're probably, if I had to determine a move on the yield curve, I'd probably say lower sooner than higher. So the 10-year under 4% before it goes over 5%. I think we're on a collision course with a recession with this trade war. and it is a trade war. It's not. It's no longer a tariff war. It's no longer here's tariffs for you, here's tariffs for you. It's a trade war in the sense that it's not just about a tariff. It's about you will relocate your manufacturing facilities here, or we will punish you even more. And you have redirection of trade going on right now. Canada and I think another country was in. I was reading this morning, canceling their, or at least looking at canceling their orders from Lockheed Martin for the I think it's the F-35. So you're getting this redirection of trade happening. That's a collision course, at least globally here. That's a collision course for a recession. Rates will the central bank will do everything it can. And because there probably will be no fiscal support, don't look to the Trump administration for grand spending budgets designed to help those who are unemployed. I think they care little about that. So the central bank will have to do all the heavy lifting, and so I think TLT will do a lot better, and then do a lot worse. So I think once we hit the recession, once we start cutting, there's where I'll probably say, okay, I'm done with U.S. debt. If the administration continues to carry on the path that it's on right now, I see no reason to be in U.S. equities. I see no reason to be in U.S. debt. I am short beta to try to get as neutral as possible. But as each day goes by and I hear these proxies. I mean, he doesn't got secretaries of Treasury, Secretary of Commerce. He's got Trump proxies. They're all Trump proxies. So it's Trump's words just with a different voice. When I hear them, I think they're hell bent on the policies and pursuing these policies, and they are not going to change. When I say they, I mean one person. The U.S. really is just one person right now. And he's not going to change. So I see no reason to continue to be long U.S. assets, much beyond U.S. Treasuries until the Fed cuts rates with what looks like an inevitability at this point. If the administration stays on this current path. You said you're more inclined towards shorting beta, and if I am doing dollar cost averaging, I intendedly want correction time to get my cost base down, which makes me long for long term, but short in short term. I'm not sure if there's a question in there. I haven't seen so many great questions that are on relevant topics in a YouTube video in 10 years. Shocked and impressed the bots haven't gotten here. I delete the bots like you wouldn't believe. They do show up. My God, they do show up, and I delete them. When you first put a video up, you'll get 30, 40 of them in the first day. So I get notifications on my iPad with every comment, so I can look at the comment, and you can tell the way it starts that it's a bot. By the time you go in to delete it, there's like 12 more comments in behind it and 87 thumbs up. Like that happens in 35 seconds, right? So I delete all that stuff. It is tiring deleting that. Now, I can spot it. Just eyeballing it, I can spot it. You telling me that YouTube can't write an algorithm, or Google doesn't have an algorithm with AI that can spot that footprint? It's such an obvious footprint that they can't spot that and just get rid of it themselves? You telling me they can't do that? And if they don't do it, is it because they can't do it? And since it's so simple, it gives the impression that, what AI have you got, Google? What is it you think you can do if you can't even do this, right? When you go to a car show, some car manufacturers put out concept cars that are never intended to be on the road. These concept cars are meant to show you the extreme limits that they can get to in engineering. It's meant to show you what they can do, so you become more impressed with the rest of their product line, saying that's pretty impressive technology in there. It's a concept car. Well, if you've got this really great product, why not do it here and get rid of these comments. Show us your concept car. Get rid of the bot. You can do it. That's impressive. But to just let it go, you start thinking, is it because you can't figure this out, this simple little thing out? You can't figure it out? Sometimes I don't understand the strategy some businesses take. Where do you find the data and the charts for U.S. corporate bond issuance? That is SIFMA, SIFMA.org, SIFMA.org. They have a whole bunch. Treasury, preferred shares, equity, anything you want to look up. Tariffs are a way of preventing countries who overproduce to export their tradable goods to deficit countries, such as the U.S. Tariffs can be used for that. Import quotas are probably the easiest thing to use for that as well. Upon implementation, U.S. trade deficit and capital account surplus will decrease. You don't know that. The hope is that it will, but you don't know that. Excess savings of the surplus country are no longer exported to the U.S. The U.S. no longer needs to save less. Should we expect to see a reduction in not following that sentence, which is equivalent to a reduction in U.S. debt. Okay, so we have Freedom Fighter. Okay, well, Freedom Fighter is in favor of what Trump says will happen. There is no guarantee at all that this will actually happen. You can impose tariffs and you can make your trade deficit even worse. You can make the need for debt even worse. In the first administration, in imposing tariffs, the U.S. lost more jobs than it created. Sure, it created jobs upstream in manufacturing, but it lost a whole bunch of jobs downstream. And with the retaliatory tariffs, all of the money raised with the tariffs had to be paid to the farmers to make up for what they lost. Hence, nothing was raised whatsoever, and jobs were lost. Simply put, it was a disaster. Never would have happened under Biden. That never would have happened under Biden or Obama. Happened under Trump. So, you can think for yourself. You don't have to get all of your thoughts from one orange source. What he's telling you is mostly not true. From outright lies to quarter lies to half lies, it's simply not true. Here's a big lie, is that Canada charges like 250% duty on U.S. dairy products. So does the U.S. U.S. charges Canada that much as well. Why don't we say that? And right now, there is no duty for U.S. dairy products coming into Canada. So here is the tariff-free zone, and here is the tariff zone. After a certain, this is volume, after a certain quantity, the tariffs kick in. U.S. is like this, way down here. There are no tariffs on U.S. dairy product entering Canada. Only at a certain level does it kick in, but you know what? It happens to Canada too. If Canada sends more dairy product in the U.S. than the limit, Canada faces a 250% import duty as well. They have it on both sides. Here's another lie about what's crossing the border. Here are U.S. border guards, here are Canada border guards. When you enter into the U.S., it's the U.S. border guards that check your car and do things. So if fentanyl is getting through, it's not Canada that's at fault. It's your own U.S. border guards that aren't doing their job. But if you want to say, well, Canada should do something to stop it, okay, well, you have fentanyl going in from Canada into the U.S. in a very small quantity, but you know what comes from the U.S. into Canada in very large quantities? Cocaine and guns. Cocaine and guns. If anyone has a complaint, it's Canada about cocaine and guns flooding into our country, right? So just because an orange person says something doesn't mean you have to take it as 100% truth. I guarantee you, he's lying to you. I guarantee you he's telling you what you want to hear and not what you need to hear. What I've just laid out are some things I think you need to hear. Right? Freedom fighter. If you want to fight for freedom, maybe freedom to hear the truth. Freedom from being lied to, perhaps. U.S. government uses military protection as leverage. If other countries try to retaliate too much, they will suddenly demand that they pay more for their own defense. So either eat the tariff to some extent or pay into them. Well, what you're seeing now is Europe and Canada willing to go without the U.S. This is to say that we got this and you're going to listen to us and you're going to bow down when we say bow down. The end result is that everyone will say, well, we don't need you then. It'd be nice to have you, but if you're going to be like that, we don't need you. And you run the risk of being chanting in a few years, we're number two, USA, USA, right? We're number two. Because the world will move on without you. The U.S. is, I think, a great place for entrepreneurship, a great place for innovation, a great place for capital, a superpower in the world, and countries want to do business with winners. But when the winner walks around telling everyone they're the winner and telling everyone else they're the loser, and they better do what the winner says, the winner won't be the winner for long. Everyone will just say, wow, that really changed. And they'll just go their own way. And they are. This does not lead to making America great again. It leads to making America isolationist again, making America poor again. And only time will tell. Would love to see you revisit MicroStrategy. Let's see, facing liquidation. Facing the liquidation question again. I'm not, I don't think so yet. Cost per coin at 60. They could be borrowing to pay lenders. Well, they'll just keep issuing shares until the game ends. There is no exit here. The moment they sell one Bitcoin, the price of Bitcoin will crash because everyone will front run MicroStrategy because that's a lot of supply that has to be sold. So there is no end game on this one. Either MicroStrategy owns it all, in which case, what use is it? Or it crashes to under 1,000, under 100, because if MicroStrategy, and the thing is, they can't do it silently, right? Public ledger, you can't do it silently. Everyone's going to know. If they sell one Bitcoin, look out below. It was a one-way road that he's traveling, and it's a one-way road to ruin. No matter how this ends, it ends in ruin. So you've got to be short MicroStrategy. I don't know that I would say anything different if I did it again. At the same time, sailors visiting the White House with the name on Time magazine and macroeconomic backdrop concerning liquidity. Yeah. Carney has been talking about strengthening relations with Europe. And if this does lead to a unified response against the U.S., what does your model of Trump tell you about his reaction to that? Trump does not back down, even if it's just destruction by going forward. He'll double down, triple down, because he's right. He knows better than everyone else. He's right. He's gonna be right. No matter what the outcome, he'll declare victory anyways on whatever is left standing, whatever ruins are left standing. He'll declare victory on. That's Trump. With Trump, you have to find a way for him to declare victory and give you what you want, right? But if it's just backing down and him saying, "Oh, okay, hang on, we're heading the wrong way here. Let's try something different." Don't expect that from him. He'll double down and triple down and quadruple down. The more isolated the U.S. becomes, the more he'll demand that everyone bend the knee. The more he'll demand it. And more tariffs. If you want him to stop, you have to find a way for him to declare victory. That's the big thing. Is he's got to save face. More than with any other leader. You have to do that with him. Why Canada denominates some of its bonds in foreign currency? I'm unaware of that. I don't think they do. Why would Canada denominate its bonds in a foreign currency? It doesn't need to. If it does, it's got to be a small amount, a really small amount. Won't that open to increased risk of foreign currency strengthens? Well, usually it does, but I'm not familiar with the Canadian market very much. U.S. market I am, but the Canadian market not really, and I don't own Canadian bonds. Well, actually, maybe I do. I don't think I own Canadian bonds. Not willingly. I mean, not knowingly do I own Canadian bonds. So, applied level after the first year. If you do not pay for the renewal, can you renew it down the road for the renewal price? Yeah, I don't see why not. The renewal price is cheap, by the way. It's only $50 for the whole year to keep getting the newer content. And that's only as of January 20th for the over 10,000 subscribers that were in before January 20th. They never faced that. This is the normal progression when you build out anything. Is you'll have some price that you're going to say, well, this is what the business model looks like. But in getting there, you have a different model on the way there, and at certain milestones you change your model so that you end up here. If you start with this model way down here when you have a little amount of content, you're not delivering a lot of value. So you have to move into the business model that you need, and because this is streaming, you need some recurring fee at some point, something, whether it's some amount that covers streaming and marketing, whatever the case is, but there must be some renewal. So I made it rather small. Let's see. What happens if foreign countries stop buying U.S. debt altogether, either to retaliate because they don't trust the country's solvency? Do you think the U.S. will consider this an act of war? I don't know that. Well, with Trump, you never know what will happen. Trump doesn't like to lose, and when he is losing, he doesn't handle it well. He calls people names. He threatens. He bullies. If he's winning, then other countries are weak and he's strong. If he's losing, other countries are cheating or something is rigged, but he doesn't lose. It's something working against him. It's the never Trumpers. It's this, it's that, it's the other thing, right? So no guarantee how he's going to respond. But I think it would be a big stretch to say you didn't buy a government bond, that's an act of war. If in fact he wants to divert all trade, let's take China for example, divert all trade back to the U.S. away from China such that China is not buying and dealing with the U.S. at all. What does China need U.S. dollars for? What does it need all those reserves for? It would be a natural conclusion to say, well, why would we expect China to continue to buy our bonds when we've slapped them in the face so many times, called them names, and kicked them when they're down? Why would we expect it to continue to do that? Especially if there's no trade with the U.S. altogether, then why continue to buy U.S. dollars? I think it would be a stretch to call it an act of war. However, you do have a stretch president in there that has done things that you never would have thought would have happened. Ooh, this is a long one here. Favorable stance, Canadian bank equities. You consider buying them with the price of pullback. Yep. Why you believe Canadian banks are a good investment in the current economic environment? They've always been a good investment in all economic environments. Given the economic slowdown in Canada, wouldn't the Canadian economy suffer from higher prices, lower consumer confidence, potentially weaker loan originations, all of which could negatively impact banks? Sure. Do you become a good investment during recession area? They've always been a good investment. For 150 years, they are dividend increasers. Never cancel their dividend. They've always been a good investment. Countries should consider imposing export taxes on goods sold to the U.S. to ensure American consumers bear an additional cost on top of tariffs. How feasible do you think it would be to implement such a policy? It is feasible. Whether the political will is there to get it done is a different story, but it is feasible. Would domestic firms support it, especially in countries like Canada, where the U.S. is essentially the largest market? Well, they're already being tariffed, right? They're already being tariffed, and uh, um, Canadian businesses and consumers are already being tariffed on the goods coming in. It's just another form of tariff. If you want to end the war quickly, rather than bullets flying back and forth, just make sure all the bullets are flying in one direction, right? So that any move they make is all self-inflicted wounds. It would hurt Canada, but it's going to hurt Canada anyways. Canada's already hurting. So if we're going to go through pain, let's pick the pain we want to go through. And for the export taxes, you pick and choose. You wouldn't put it on consumer goods. You'd say, look, Americans, you can buy our stuff and just pay the duty, pay the tariff your president wants you to pay. We won't charge you anything more. But you want uranium? 100%. And good luck finding another source. You want potash? 100%. Good luck finding another source. You want Canadian crude oil? 100%. Or you can lay off 30,000 refinery workers and watch the price of gas go straight up. You be strategic. You pick the items where the U.S. really has little choice. Uranium is probably the first one that you can pick. Electricity into the U.S. Doug Ford had the right idea. Why he backed down, I don't know. Maybe the feds convinced him that there was a greater plan in place and that he was potentially messing it up. But it wouldn't be across the board. You just pick and choose. Academic question regarding intuitiveness of interest rate parity. The theory states a country with higher interest rate should have a lower forward exchange rate. Well, that's not a theory. That's math. That's just math. If Canada's priced at 140, an increase in Canada's overnight rate might push the forward rate to around 1.42. In reality, countries with higher interest rates often see their currencies appreciate. Investors seek higher returns. You're confusing the forward rate with a forecast. A forward rate, so let's take a spot rate, price over base, right? The price currency over the base currency being 1. So 1 US dollar buys, let's say right now it's 144 Canadian. And the forward rate is 1 plus the interest rate in the price currency, and it's just days over 360 for how many days forward you're going over, 1 plus the interest rate in the base currency days over 360. And that will give you the forward rate of price over base. So if the price interest rate is greater than the base interest rate, this term will be greater than 1. The forward rate will be greater than the spot rate. If the base currency interest rate is higher, then this ratio will be less than 1 and the forward rate will be below the spot rate. That's just a mathematical conclusion of the interest rates. The forward rate is just the time value of money. It's moving money forward in time at those interest rates. If you had 144 today and you borrowed US dollars and you had Canadian dollars, what would you have in the future? Or sorry, you borrowed Canadian, you invested in US, change it back to Canadian. What would you have at those interest rates? That is not a forecast of what the future spot rate will be. The forward rate is just a mathematical necessity based on the interest rates. That's all that is. If what you do normally see is the currency with the higher interest rate appreciate, which is consistent with a carry trade, but is inconsistent with something called UIRP, which is uncovered interest rate parity. This over here, what I just laid out here, if there is a forward contract, that is called covered interest rate parity, and that does hold, but it is not a forecast of where the spot rate will be in the future. I think that takes care of that one. If I take a situation or news that Trump has put tariffs on Canada or an automobile, can we definitely say what will happen by doing our analysis? I don't know what that means. Can we say, well, you can't definitely say anything about the future. You can speak in tendencies or probabilities, but not deterministically. But when you say doing our analysis, like seeing reports, markets, I don't know what that means. Seeing a report on what? So I mean, I don't know how to answer that one because I'm not sure what the question is. Is it just a prediction that from our analysis and experience, these bunch of things could happen, but also in addition, there is room for other things outside our purview, which we did? Well, you can say that about anything. You can say, well, I'm going to, predict sales for a company over the next year, and it may happen that way or it may not happen that way, and you may have it, you may have all the variables or you may not have all the variables. It's not particular to anything. It's, welcome to prediction. That's just the way it is. Export tax. We almost had a case study of this in Ontario. Yeah. Level 3 candidate. Use your service for all levels. Is there any way for candidates such as myself to join the Discord? Right now it's only for applied level subscribers. I will then open it up to YouTube, but there'll be different roles. And with different roles comes different permissions to see things. You'll see a market outlook channel and that's it. But to see anything from the applied level, probably not. That means you wouldn't have access to the research channel or the news channel. There's investment ideas, trade ideas, lots of great stuff going on in there. You wouldn't have access to that. Last Q&A asked about risk of entrepreneurship. You gave one resource, Harvard Innovation. Yep. Anything else like resources or other stuff you would like to recommend? Not off the top of my head, no. Any set plan for YouTube live session? I don't know that I would do too many live sessions on YouTube. I'd probably do them on Discord from here on in. Please do something about recording of Market Outlook whenever you go live on Discord. I'm also from Asia, so I miss most of the time. My link to Discord says expired. In this tariff war with U.S. tariffs and other countries' retaliatory tariffs and consumer boycotts of U.S. products, you state all countries will suffer. True. Why is U.S. dollar weakening against Euro since the beginning of 2025? Because they've opened up a trade war on too many fronts. If it was one country, the U.S. should appreciate against that one country, but they can't win on this many fronts. They will be a loser as well. FX market predicting the U.S. economy will be in worse state than other economies? No, I'm not saying. I wouldn't say the currency would say it would be in a worse state. Only that with this many trade wars, you will have trade divert from the U.S. There will be less demand for U.S. dollars because there'll be less demand for U.S. goods. European stock, Chinese stock markets rising. Why do you think they are rising? Money has to find a home. Money cannot just sit on a shelf somewhere. Money has to find a home somewhere. And if it's not going to find a home in U.S. bonds, which it seems like it's not, or U.S. equities, which doesn't seem like it wants to, it's got to find a home somewhere else. It must go somewhere else. Won't their economies also suffer from tariff war? Not if they unite together, right? If you are a very strong army faced with 8 weaker armies, you can take out any of those weaker armies one-on-one. But if you decide to take out all 8 armies at the same time and those armies all unite, those armies being economies, not military, but economies, if they all unite, they just might be bigger than you. And you might be facing a losing battle, especially if they decide to redirect trade agreements among themselves. Those are multi-year, multi-decade trade agreements that you don't just budge your way into after 4 years. You're on the outside. I think that's a real potential on the path that the U.S. is on right now. It makes sense. U.S. stock market is declining. Trump's flip-flop tariff policy generating uncertainties. You explain U.S. exporters would lose their sales overseas. Domestic overcapacity gets created job losses. Like you keep Q&A market outlook in YouTube instead of moving to Discord. With YouTube, I can stop the video, ponder, do my little research on the subject, write down my own thing, continue watching. Discord, people continuously add their comments and the screen keeps moving fast. Difficult to know for which comment you are responding to, and I have no time on my own. Well, that's a good point. But this comment section on YouTube will be shut down sometime in May or June. Can you elaborate a bit more on CPI? Oh, okay, did that one. Could you speak to the compliance operational burden on companies from tariffs? I really don't know what the burden would be. Usually your import-export broker would take care of all of that for you. It's just on your landed invoice, it's just a higher dollar amount. From front-loading stock, tech upgrades to ensure payments, inspections, slower processing time at ports. I don't know that it'd be slower processing time. I really don't know how it works at a port. I've imported before, years ago, and usually you have a broker. And you give your broker all the origin certificate of exports, which is provided to you by the manufacturer, and you get a bill. I mean, that's it. I don't see all the work that they do. So I really don't know if tariffs changed. I, as the importer, wouldn't notice anything different. I'd just get a bill with a higher number on it. You like CapRate, other Canadian REITs? Just trying to understand what makes you like them so much, as the performance of CapRate hasn't been great so far. Wow, it has been. I've historically bought CapRate in the low 40s, sold them in the mid 50s twice now. Here I am again. Just because I own it doesn't mean it's going to run to the mid 50s. It's just a matter of patience. The market will come to that conclusion as rates come down. There'll be a fight for return. Cap rates on apartment REITs tend to be low to begin with, so there still is some competition with Canadian money market securities and with Canadian bonds. Dividend only gives you around 3%, closer to 4%, I believe. And CapRate has raised its dividend twice in the last year, right? I believe you'd be making money on the options. I do. CapRate has options. You can do something on the options, but I don't really play them that much. It's just more of a longer term hold for me. I'm comfortable with it. You may not be. If you're 21, I see no reason for you to be in apartment REITs. I'm 58. Why would I want to take on huge piles of risk, right? I'm well, I shouldn't say that because I do take on risk, but I think somebody 21, 22 probably has no reason to be in REITs. Anyway, I can access your CFA level 2 mocks in 2019. I have no idea. I'm going to take the exam in November 20. Okay, that question makes no sense. Can I access your level 2 mocks for 2019? I'm taking the exam in 2024. Why would you want 6-year-old exams? I don't understand that question. Consequences of strong retaliatory action against Canada against U.S. export ban raw materials. It would hurt both sides. Yeah, the consequences, it would hurt both sides, but both sides are going to get hurt anyways. So both sides are going to get hurt anyways. Why bring a knife to a gunfight? Why not bring a gun? How would you go about doing analysis on a stock or a market, like the specific format? Oh, well, that's a whole course. When I do analysis, it feels I'm just wandering and not really knowing what I'm looking for. Well, anything you do starts with a list of questions. If I said, hey, I got a company I want to sell you, would you say how much, or would you say, well, what does it do? What's its sales? How much do you make off each dollar? What's your net income? How many employees do you have? How many locations do you have? How are your sales been growing over time? Who are your competitors? How big are they? What advantage do you have over your competitors? If I buy you, what guarantee do I have that in a year I won't be out of business? What are you not telling me? What is there I need to know? Can I see your financials? What's your cash flow? Are you asset heavy? Are you asset light? Do customers pay you on time, or do you have like just a whole bunch of accounts receivable and no one's paying you? What's the quality of your product? Is it any good? Have your gross margins been increasing or decreasing? Do you have any recurring revenue in your model at all, or do I have to come up with sellers each and every time? Is this a really research-oriented business? Is it heavy on marketing and heavy on that expense? Like you'd have a whole bunch of questions that you would ask. It's the same thing of a publicly traded company. Is what the hell do you do? What's your business model? What's unique about your business model? Do I expect your results to get better or worse, or to stay the same? Lots to do there. That is what the CFA program will help you structure, is the way that you would approach the company, so you would know, well, okay, this is an early stage company. I'm certainly not going to look at it in terms of free cash flow and dividends. It's an early stage company, probably has negative free cash flow. That's that story in small caps, especially emerging stories, is really about the big story it can tell. What's the size of the market it's addressing? How fast is it growing its sales? Right? CFA can help you with that. I asked GPT about the difference between PPI and CPI. There we go. We don't have many made in America items. When you walk the streets, you can count only a few Teslas. I'm sure you know US and Europe would agree on something soon, as they cannot put in place the infrastructure and everything they would need to reduce dependence on other countries. Why would investments flow to this part of the world with the amount of regulations and high taxes, not very liquid markets? Well, sometimes things are the way they are because the world is the way it is. Change the world and the things that are may not be. Canada has a lot of different trade barriers trading between provinces, with no political appetite to reduce those barriers because the U.S. was right there. We could just we could do business with the U.S. The rest of this stuff is too hard to do. Well, now suddenly we're looking at, let's reduce these interprovincial trade barriers so that we can trade east and west instead of just north and south. It has forced us to reconsider our position. This may force Europe to say, look, we can't compete like this. If we're going to go it alone, we got to get rid of some of this stuff. It may actually, Trump may actually make Canada great again, may actually make Europe great again, may actually make the world great again, ex-US. We're okay with that. If Trump wants to export US exceptionalism to every other country, we'll take it. I mean, the idea of changing the provincial trade barriers, they've been stupid for a long time. Let's get rid of those. So that you can have goods and services trading right across Canada without these barriers. So if anything, Trump has done that to Canada, has forced us to be far more competitive. Maybe Europe takes a look at itself. The market is red. Do you pull out all your investment everywhere and then buy? No, I buy when it's red. I sell when it's green. What about a stock is going down for a day or two? Do you pull all your money? No. Do you have any rule for it? Well, in the finance world, there's no secret club that we all belong to that says do this, do that. But no, I don't pull all my money for a day or two. That's a beginner's mistake. Rookies, beginners, and I'm not saying that in a negative way. Anybody who starts for your first 5 years, you're a beginner, you're a rookie. I mean, you really haven't lived through enough cycles. They do it wrong. They sell on red days and they buy on green days. You have to do it the other way around. You have to buy on red days and sell on green days. So when the market is red and really red, you should be looking at what you're about to buy. And when the market is 22, 23 times forward earnings, you should be looking at what you're going to sell. I've seen a lot of people on Reddit just keep at it while the stock is going down for days, maybe hoping. Well, hope is a bad strategy, right? Hope is a bad strategy. Now, you can have two people holding on to the same losing stock. One of them hoping it goes up, the other perfectly comfortable holding it because they understand the stock and the fundamentals, and they know that this is just a temporary correction in the price and it'll go back up. But hope will cause you to do all sorts of stupid things. Hope is not a strategy. If you are relying on hope, go to a casino. Plenty of room for hope there. Go to a nightclub. That's full of hope, right? Just want to clarify, if those countries impose more taxes on products, if those countries impose more taxes on products which have been tariffed by the U.S., exporters in those countries might experience a big hit in their sales. If those countries, I don't know who those countries are, if those countries impose more taxes on products which have been I don't know, what do you mean impose more taxes on which direction? I can't understand that first part. I'll pass on that. U.S. imposes tariffs on wine from EU, accounted for 40% of EU's total exports. I made this number up. I was going to say I don't think it's 40%. Okay. European companies could be out of business. Well, American can simply find other substitutes. Well, if America can find substitutes, Europe can find substitute markets as well, right? If you get rid of European wine on U.S. shelves and you say, well, the U.S. could just find substitutes, that means they'll be drawing supply from somewhere else. That means there'll be more room on other shelves because what the U.S. drew in is not on those other shelves. I don't see the U.S. saying, we're not going to take European wine. We'll show them. We'll fix our trade deficit. We'll take South American wine instead. That's not fixing the trade deficit. They would have to lean more heavily into California wine. Well, if that's the case, then there's not enough California wine to fill the shelves in other countries. Other countries would then use European wine. So if in your argument one country can substitute, then the other country can substitute as well. Can say, well, we don't have to sell to the US. We can sell to other countries. Canada, for example, no California wine on the shelves in Ontario liquor stores. So why not more European wine? All right. Where you get the number for reserves, you get that from the Fed balance sheet. And and for that, just type in Fed balance sheet. You'll get a link. And just follow that link, I guess. What the significance is in the number of months that we calculate. Where does 2.5 trillion come from? 2.5 is my best guess as to where the level of ample reserves are. And months is the number of months that if they are doing 40 billion runoff, the number of months that they have left before they would have to stop if 2.5 billion is the level of ample. Or 2.5 trillion, sorry. Difference between a vega trade and a gamma trade. I don't know what value there is in doing a gamma trade. I'll pass on that one. I don't understand why you would want to trade gamma. I mean, you're not a dealer. Where do you think AI will fit with your investment process? No idea. Are you using or thinking of using an AI? Not really. Help me understand the mechanism of the Fed selling us some of Fed's MBS could lower the 10-year Treasury yield. Well, you sell the MBS, you got money. You use that money to buy the 10-year. More demand for the 10-year drives the price up. Price and yield are inversely related. The yield will drop. Long duration should be a winner. Given Trump actions, heightened fear of inflation, his stated objective of getting rates lower, anticipated countries will start selling their treasuries to counter Trump measure. And central banks don't trade. Central banks aren't in the business of making money that way. Central banks hold reserves to support the banking system. And that's it. They're not in the business of second guessing the market or timing the market or selling. If they need US dollars, they need US dollars. They'll keep those US dollars on the shelf in the form of treasuries because it is needed. The system itself needs the US dollars. So that's I don't see them thinking like an investor or a trader. A central bank is not an investor in US bonds. It holds different currencies in reserve, and in doing so, it says we may as well get an interest rate. The only time they'd be concerned about anything is they say, well, we don't need this many US dollars now. We would like to convert them back into our own currency. It would be nice to do so at a premium. Do you consider yourself as a trader, investor, or both? Both. Type of trading, what your type of trading does and how it works. In brief, no, not briefly. I've read different types of trading. How many types of trading are there according to you? I have no idea. I don't know. I don't know that I call them types as much as strategies. Whatever trade you take after your analysis, can it be called as betting? Oh, you can call it a bet. I don't know that. I don't know what you mean when you use the word bet. Do you have a different word in mind? All investments are bets about the future, unless you have a very strict definition of the word bet. Still some people who can't join Discord. Duration is TLT. Well, TLT is an ETF that holds bonds, and we call interest rate risk duration. And when you hold bonds, you have interest rate risk. Interest rate risk means the price of what you're holding will change as interest rates change. How much will they change? Duration is the measure. A duration of 16, for example, will tell you if interest rates change by 100 basis points, the price of what you're holding should change by 16%. What are these outsized spikes on FX charts? What are these? Well, I don't know. I can't see what you can see. On almost every paid, you can see huge spikes once in a while. Okay, I have no idea. But do you see the country being so united on dealing with US? EU, Canada, China all have their own interests at hand, though. Well, sure, they all have their own interests. But if we can't deal with the US and the Euro can't deal with the US and China can't deal with the US, well, okay, we'll deal with each other without the US. My Discord link is saying expired. How do I join your Discord? You notice I'm skipping over those. I've explained many times the Discord. I've even put a video out about it. It is by invitation only. It is on our site. There is a link that you can click. It does expire after a period of time, at which case you then have to email in for a new link. And then after you are verified, you will get a link particular to your email. We've had some people say my link still doesn't work, yet we see their link being used. And that's the end of that. If you give your link away to your buddy, then that's it. You're on the outside. Done. Once the link that's given to you is used, we can see it being used, it's over. In a couple of weeks, we'll be doing an audit of the system, and every link must match an email, must match a Discord username, and for those that don't, out they go. We know there are some people in our Discord that aren't applied level subscribers because some of our applied level subscribers says, use my link, I'll just get another one. Doesn't work that way. Once we see it used, once we verify that your link is being used, that's it. Now you don't get access, but your buddy does. So tell your buddy to leave, and you can use your buddy's account. But that's the end of that. It is a permissioned site. Discord is not public. It's not for everyone. It really is just a feature for applied level subscribers. But to make it that way, yes, we do have to give out links that are time sensitive, that are unique to each individual. And then once we're done, we then have to audit and comb through and get everybody out that doesn't belong there. Yeah. So if you are having trouble getting in there, it could be that you're having trouble getting in there because of the time-sensitive nature of the links. And for some other people out there, it is because you gave your link away and somebody else is now enjoying what you should be enjoying. But they won't be enjoying it for long. As soon as we get to a stabilized level without 150 to 100 new people coming in every day, we will run our audit and we will kick everybody out that we cannot verify. You never followed up on the Costco call. U.S. depreciation may lead to higher inflation. How do you think it will affect TLT? I don't know. I don't see inflation being the enemy right now. Even if that number goes up, I don't see it being the enemy. The economy, I think, is going to be a bigger deal than inflation, a much bigger deal. Do you teach and CR the same as on the applied level? Or some secret, well, no, they're not secret techniques, but they are different, yes. Some of them are in the applied level, some of them are not. And there are some details in execution that simply aren't in the applied level. That it's hard to show it unless you actually have it. So if I want to show you how to position yourself in a recession, I kind of need a recession to do it. Otherwise, it's just theoretical. Applied level app. Yeah, I had a conversation about it yesterday, and we're on our way. It will be a consumption app. What does that mean? Discord will still be Discord. The app will allow you to watch the market outlook and watch the applied level video without having an internet connection. So you can download the videos into the app and then off you go. And there'll be some other functionality. I don't know exactly what everything we're going to put there is, but it is not interactive in the sense that, you do things and it does things and then you do things, like a game where you're tapping on the screen to get things done. It's just consumption only. There's no interaction with that. And that is to avoid Apple's 30% paywall there. I think DT pays attention to S&P 500, and that's why tariffs haven't been implemented. Tariffs have been implemented. Huge drop beyond correction and more time passing. His ability to blame his predecessor has to wane. You would think, but don't expect him to stop blaming Biden and Obama. I mean, he still blames Obama for things. That was 10 years ago. More than that, right? 16, 26, 9 years ago, he still blames Obama for things. I think he could claim victory and pivot when it gets ugly. One video said MicroStrategy was a pyramid scheme when the stockholders were the beneficiaries at the expense of bondholders, because when they convert, stockholders increase their share of the pot of Bitcoin. Bondholders are the one getting profit and expense of stockholders. Which one is correct? Bondholders don't really care about the stock. Bondholders care about the volatility. They're trading the volatility. That's where they make their money. They don't really care about the stock, nor do they want the stock. They're, in fact, short the stock most of the time. And their short position will increase or decrease depending on how far out of the money they are on the call. But they really don't want the stock. If they are, if the stock is put to them, they get they're short. So if the stock is put to them, it would just cover their short position. If it got to that point, they'd probably be 100% short the stock. So they're not going to lose on that. Why all of a sudden you're simping for Canada when a few months back you made a whole video on why you left that trash country? Simping for Canada? I'm not simping for Canada. You need to listen to what I say and not what you want to hear. I see this a lot, by the way, and I'm going to make a guess that you're under 25. And I think the education system's failing a lot of you. Is for some reason, if you like a characteristic of something, you feel you must like everything about it. And not ever be critical about it. And if you don't like a characteristic of something, you feel you must hate everything about it and never say a nice thing about it. It is possible to say, I disagree with this person, but this and this I'm okay with. And you can say, I don't like this thing over here, but this and this I'm okay with. And I really like this person, but that thing he said, I don't like that at all. It is okay to do that, You are allowed to say I'm 80% on board, but 20% against. You can have two opinions about the same thing, with one opinion outweighing the other opinion. So if you like Trudeau You can still be critical about some things he does. And if you dislike the guy, you can still say, at least he did this and this. I agree with those things. You can do that, you know. I'm not sure if the education system has taught you that, right? That the world is full of shades of gray. It's not just black or white, but shades of gray. And there is an expression, I can't attribute it to a person, maybe somebody else can, but the sign of intelligence is the ability to hold two opposing views in your head at the same time. If you can't, if you can only look at one thing and say, all bad, all good, all bad, all good, man, the education system has failed you. I see a lot of that from people. Well, you were critical about the letter A last week, and now you're saying you like the corners? Which is it? You know, I mean, come on, man. Applied level subscriber can't access Discord. U.S. trade represents 4% of GDP. Canada trade represents 70% of its GDP. You are repeating. I think you're just repeating stuff you heard somewhere, and I think you'd like it to be true. But I've replied to you here. You are significantly misinformed. So either your research sources were faulty, or the person you heard it from. I'm sure you heard, you read, you saw somewhere it was 70%, and you decided to repeat it as a fact, and now here you are. Looking like you're massively misinformed. Whoever told you that was massively misinformed, and you are now repeating it like it's a fact. It's not. Not only is it not a fact, you are way off, like way off on that one. So